Okay. All right. So as I was saying though, what we do here at Currency Guys is a little bit different than the average trader, let's say. What I'm actually going to do is break down our way of setting up charts. So first and foremost, the first thing I want to do is I want to find what currency pair that I want to trade for this week. Now let's say it's Euro USD. As you can see, we use TradingView.com. The reason why we use TradingView.com because it acts more so as a trade journal. So therefore, we're able to keep our notes and pretty much can control where we have all of our information at without having to go to multiple sources. So again, let's say I want to trade Euro USD. Now, one thing that I teach my students in the very, very beginning is that we always check the indexes first. Now, what is an index? Basically, an index is basically calculated by all the micro and macroeconomics within our economy. So every week we have news releases that comes out on behalf of currency or on behalf of the economic system, and it's affected by that index. So I supply them with an index chart. Now each currency has its own index. Now the index code for the euro is called the EXY. So as you see right here, it says Euro Currency Index. So with this Euro Currency Index, is going to allow me to know if this currency is strong or weak. Okay. Now, one thing that I do want you to know is that we keep track of this actual whole number. This is the value of the euro. Okay. So that 116.9 is the value of the euro. Now, the next key thing is this percentage here. Okay. Or this percentage right here. If this is above or below 10%, it's telling you that that trend is true. And what I mean by that is above 10%, this case is negative. So it's below 10%. We're at negative 28%. So at negative 28%, that's allowing me to know that this currency is can be weak in that sense. Okay. Now I'll do the same thing with the DXY. So the dollar index, I'm going to type in DXY and it's going to pull up this dollar index. Now, the reason why I'm doing this is I want to know which currency is strong and which currency is weak. In this case, it's saying that the dollar is strong. It's at positive 18%. So if I look at the Euro USD chart as so, I want you to realize what this is actually saying. This is saying Euro versus the US dollar. Which one is stronger and which one is strong and which one is weak. Once we figure that out and we know that, we're able to calculate, we're able to figure out if the market is going up or if the market is going down. The only way we can figure that out is by checking what? Those indexes. Okay? So in this case, the EXY was bearish, right? Which means it was weak. Then we got the DXY, which is for the US dollar, was bullish, which means that it was strong, right? Now, we got to notice, as I said, because how could we even begin our setup without knowing that important information right there? Okay, so now we have what's called a bias, and our bias should be what? Our bias, if the euro is weak and it's the dominant pair, and the dollar is strong, which is the secondary pair, it'll cause Euro USD to go down. So our bias would be to sell just based off of those indexes. Now we got to do something called a setup. Now, when we're doing our setup, we use 4 particular time frames. We use the daily chart, we use the 4-hour chart, we use the 1-hour chart, and we use the 15-minute chart. Now, the thing with these time frames, each one of them basically has its own use. Now, with the daily chart, this is particularly used for direction. Okay. Then the 4-hour chart is used for momentum. All right. Then we got the 1-hour chart. This is where we find our take profit and our stop loss. Then we use the 15-minute chart for our entry. Now, the reason why we break it down this way is because if I'm looking to enter into the market, I don't want to be trying to find my entry, let's say, on a daily, on a 4-hour chart, because I'm going to have to wait for each one of those candlesticks to form, and it'll take too long. So therefore, it's a lot easier to find my entry on a 15-minute chart. Okay, here, hold on one second. Let me. All right, drop questions in the chat in the chat down here on our platform there. Drop questions down there. I'll get to your questions at the end. But now, as I was saying, since we got a bias and we kind of got a structure on each on a setup, basically, we got a direction chart, we got a direction chart, we got a momentum chart, got a stop loss and take profit chart, and we also got an entry chart. Now, one thing I want you guys to realize is this price level that you see here. This price level to the right, yeah, there we go. So this price level to the right is the conversion rate. So it's telling you if you convert €1 for US dollars, you'll get, instead of just $1, you'll get $1.16, 16.9 cents. So that's what these numbers are. That's the conversion rate. Okay. Now the next thing is when you're on your charts and you're looking at your charts, each candlestick on that specific time frame represents whatever time frame you're on. So in this case, the daily chart, every candlestick represents 1 day. Okay, so every candlestick represents 1 day. Now let me go ahead and start this setup. Okay, so now the way that this setup works, we're only going to use these 4 time frames, and we're going to look for the noticeable change in direction in the immediate market area. So that means, what I mean by that is I don't want to go all the way over here and worry about that high and this low. I want to focus on the immediate market area. And what that immediate market area is right here. So this is the immediate market area with a noticeable change in direction. Now, John, this is live. This is live, boss. It's live. With the noticeable change in direction. So what I want to do is I want to identify the highs and lows on each one of on this time frame, but the immediate high and low on this within this immediate market area. So where would that be? You know, it's common sense. Now what I'm going to pull out here is horizontal lines. Okay, with this horizontal lines, what I'm going to be able to do is I'm going to identify the highs and lows with this line. Now I use basically burgundy lines for the daily chart, red lines for the 4-hour, orange lines for the 1 hour, and yellow line for the 15-minute. Okay, so the first is I'm on this daily chart, I'm gonna use the burgundy line, and I'm gonna identify my high, which would be right here. Okay, then I'm gonna identify my immediate low, which would be here. Now, how do I know that? From this simple area, this is the highest point. Then where did the direction change? You look for noticeable change of direction. You can see that it went down and it created this as the lowest point. Okay, here, one second. Let me make sure that this live feed is actually being registered. It is live. This is a live video. It's not a pre-recorded video. So if you're tuned in right now, it is live. So just to give you guys that disclaimer, I didn't pump fake you in no type of way. All right, guys. So since we got the immediate high and the immediate low of this daily chart, now I want to do the same thing to the 4-hour chart. Now I'm looking in the immediate market area. So I'm looking where the market is currently kind of changing direction. Okay. And what I got to do, let me kind of retract for 1 second to go to the daily chart to kind of tell you guys what I did here actually. So what I did was, from me finding that immediate high and that immediate low, I trapped the market within a range. Okay. So I trapped the market between the range of that high up there and this current low down here. So the market is currently trapped within this range. Now, what I want to do is I want to be able to figure out a potential entry or figure out where the direction is currently. So if I'm looking currently at this current direction in this immediate market area, I can see that I got this bullish momentum currently, right? Now I want to keep track of all of this stuff because this is kind of like a checklist. Pardon me. So I'm just going to say bullish on the daily chart for direction, right? Now, the reason why it's bullish is because we already came from this swing low and we're starting to kind of work on a swing high. Now, remember our bias from our indexes is still, short. It's still to sell it. So we haven't changed our bias from this daily chart or this daily direction here. Now, what I want to do is I want to go to the 4-hour chart and I'm going to do the same thing. I'm going to identify the immediate high and I'm going to identify the immediate low on this 4-hour chart. Now this 4-hour chart, I'm going to use the color red. So this is my immediate high right here. So where will my immediate low be? Right down here, right? Because you're looking for noticeable change in direction. I've noticed that the direction came down and started a downtrend, but then it reversed and started the uptrend. So that's the noticeable change in direction. Now, where is our momentum currently? Current momentum is bearish, right? Now, I'm gonna give you guys a trick. When I'm saying where is the direction and where is the momentum, the trick, what I'm looking at is I'm looking at that open candlestick, okay? I'm looking at that current open candlestick of whenever I'm setting up my chart. So right here, the momentum is bearish because it's the current open candlestick. And as I said before on the daily chart, I said the direction was bullish because that's the current open candlestick there. So that's just a quick tip for you guys. I can't give you guys all the juice, but I will give you enough to where you can survive. All right, so let's do the same thing on this time frame. We're looking for the noticeable change in direction of the immediate market area. I know that sounds like a lot and a lot of technical terms, but really it's not. So I'm just looking for that immediate high and that immediate low. Okay. So this is my immediate high right here. And currently the market is actually at the current immediate low, which should be there. Okay. Now this is the chart that I find my take profit and my stop loss on. All right. I'm gonna go to the 15-minute chart and I'm gonna actually do that same exact thing. Looking at the current, looking at the current market conditions, and the immediate high or the immediate low is where I'm putting those highs and lows at. So in this case, 15-minute chart. So this is why I like to tell you look for noticeable change in direction. So if I'm looking at this 15-minute chart, you can see that this is the high here, right? Now, why is it? Because this market came down to this downtrend, started a downtrend, then the direction changed, right, to bullish, which would be here. And then obviously my low is where we currently at, well, not currently, but where we previously were at. All right, so now that I got, pretty much my immediate highs and lows mapped out on this time frame, now I got to do something called Fibonacci retracements, okay, or the fib tools, fib levels. Now, we only focus on the 38.2 fib level, okay, it's called the 382. Now, I'm not going to spend much time explaining that or drawing, getting that drawn out. If you do want to know more about that, you can go, and get access to Financial Alchemy Pro, where all of that stuff is explained to you. It's a tab right below this video where you can actually get access to Financial Alchemy Pro for $39 a month, and we're all going in detail with that. But anyway, what I do with this step, which is step 2, is now I'm going to draw my fibs. Now, the way you draw fibs is the market is going up. You draw from swing low or the lowest point to swing high. Okay. Again, in Financial Alchemy Pro, I explained to you how to set up your fibs and everything like that. Yours might be a little bit different than what mine's currently are. But again, now I want to identify the 382. Now, the reason I want to identify the 382 is because this is the potential reversal point. Each level on a Fibonacci retracement acts as a retracement level. The market retraces to those levels and it potentially reverses. Okay, so what we want to do is we like to catch the market out of balance. Okay, so at the 382 level, this is where the market becomes imbalanced. Okay, this is where the market becomes imbalanced, and we somewhat have an equilibrium at this point. But let's pause here. Let's pause right at this right for a second. For my people who've been with me for a while, you might know what I'm about to talk about now. First, let's talk about how the market is moving. Okay. Nine times out of 10, a lot of you guys have been told that the market is moving by supply and demand. Well, I'm sorry to tell you, but that's a factor, but it's not the case. What's moving the market is the expectations of other traders. What other traders are expecting to happen within the markets is what's moving the markets. Okay, so with that expectation is constantly changing and it's in a constant change, it creates something called fluctuation of price. This is why you see these waves in the market. Okay, this fluctuation of price is basically the imbalance of expectations. I might think that the market is going up and John might think that the market is going down, right? So therefore we have two different perspectives on the markets, and in a sense we don't have an equilibrium in that aspect because there is no perfect competition. So if in the thinking of forex trading, just because you can only buy and sell doesn't mean you have 50-50 odds. Doesn't mean that there's an equilibrium within that, because nine times out of 10 there is no equilibrium within that, those odds that you thought was irrelevant, or thought was relevant I should say, because there is no perfect competition. Me and John have two different ways of thinking. We have two different outlooks on the market, so therefore it can't be supply and demand. It can't be an equilibrium in trading, because let me tell you one thing: if there was an equilibrium in trading, which means you had 50-50 chances, the market can move straight down and come straight back up. Okay, it doesn't have to fluctuate if it was 50-50. Okay, it can be one straight line going up and coming back down. But since we have this fluctuation of price, which is what this generally is, this fluctuation of price is telling us that this market is in a constant change based off of the expectations of other traders. So therefore, at 38.2 zone, the expectations somewhat stabilized. Other traders begin to notice that the trend is going up or notice that the trend is going down based off of different techniques that I teach you guys again in Financial Alchemy Pro and in my one-on-one mentorship. But there's certain things that happen at that 382 level that allow us to be able to place judgment there. So therefore, usually we get good entry zones off that retracement level. So we draw Fibonacci retracement on our daily chart. We draw Fibonacci retracement on our hour chart and our 15-minute chart. Only time frame we don't draw fibs on is the 4-hour chart. Okay. So another key thing is this is why we color code. Okay, we color code so I know what time frame is what. So I know, okay, this is the 15-minute low or this is the 15-minute high, and so therefore I'm a little more. You gotta be really hyper vigilant to detail when you're trading. Detail is key. Okay, so you got to be hyper vigilant to that. So therefore, this is why I use the color codes that I do, so I can separate what is what. All right, so now I'm gonna use the same color as I did before, orange, but this time a dotted line, and I'm going to draw it right at that 382 level. And I drew that Fibonacci retracement from the swing high to the swing low. So from that high to that low, I started at the high and I went to the low for the simple fact that the market is going down. So anytime there's a downtrend, we do fib from swing high to swing low. All right, so then I can delete the fib. This is my potential retracement level. As I said, I'm not going to go into detail on that currently, just because it'll take a little bit more time. But that's my fib level, my 38.2. I'm gonna do the same thing here. Draw one more Fibonacci retracement from swing high to low because the market is going down. And I'm identify the 382 zone. This time I'm gonna use a yellow dotted line to identify that. All right, so now that I got this 382 zone identified, here, pardon me guys, just 1 second, bear with me. All right, so now that I got this 382 identified, now what I got to do is I got to use the other time frames, or I got to use the hour time frame, pardon me, to figure out where I'm going to find my stop loss and my take profit. Now with a stop loss and a take profit, we use something called risk to reward ratio. With a risk to reward ratio, basically we risk one to make 3. Okay, so we call this a 1 to 3. So if I'm risking 10 pips, I want to at least be making 40 pips or 30 pips. Okay. So risk to reward ratio is always 1 to 3. We never want to risk 1 to make 1. So I never risk 10 pips to make 10 pips, because in that case you're gambling. You might as well go to the casino and play roulette, period. So we don't gamble. We use proper risk management and money management to place our trades and to manage our trades. So that's the number one thing that I want you to know. What I'm teaching you and showing you now is not necessarily how to trade. I'm showing you a strategy that works. Okay, I'm putting all I put the blueprint together for you to where all you have to do is follow it step by step, as though the other 8,000 people that I've trained this same exact strategy to, that's benefited from it currently. So now we use risk to reward ratio of 3 to 1. Now I said that, let's just say theoretically I'm going to sell this. Now I would do, there's a lot more to this setup, so I will be doing a lot more. But let's say theoretically I want to sell this setup. Now I'm going to go to my hour chart, okay? I'm going to use my 38.2 zone as my entry. So I'm using 382 zones as potential triggers for me to enter into the market, okay? So I'm going to use this 15-minute 38.2 as a trigger to sell. So I'm going to go to my hour chart, and I'm gonna click down here where it says long and short position ratio. So literally the 1, 2, 3, 4, 5, 6, 7 tab on Trading View. Yeah, I'm gonna click on short position because I'm selling. If I was buying, I would click long position, and I'm gonna click right where I'm entering that. So you see what it has done is created basically a 50-50. I'm risking 35 pips to make 35 pips. My risk to reward ratio, you can see the middle box in there, say risk dash reward ratio is 1. I want to change my stop, and I'm going to leave my take profit to where they said it's the best, highest probability. All I'm doing is I'm going to keep moving my stop until I change this risk to reward ratio to 3 to 1. Or close as I can. Sometimes you can get 3 and 1 perfectly. I'm gonna stop at 3 and 1 5. So now I got 3-1-5 is what my risk. So now I'm risking 1 to make 3. So I'm risking 11 pips to make a total of 35 pips. Okay. So my stop loss is coincidentally is my 15-minute resistance point that I've already mapped out. Okay. My take profit is just 35 pips away, all right, from where I enter into the market. Now this is the basic setup. This is the basics behind what we teach you, here at Currency Gods. This is how we break down the chart. So now I'm gonna kind of take some time. I'm gonna allow you guys to ask questions that you may have within the chat below. I think you got to be logged into Facebook in order to type into the chat, but you can ask whatever type of questions you may have. I'm gonna spend about 2 or 3 minutes, and I'll ask any type of questions that you may have. If that's either about this strategy, about mentorship, about Financial Alchemy Pro online training, whatever questions you may have, open discussion right now. So I'm gonna just take a second to let me log in and see. We do got some viewers from YouTube, streaming from YouTube, so I'm gonna bounce from both to kind of get an idea on what these questions may be. So bear with me, people, bear with me. One other thing, you will be able to stream this again. So if you did miss something, in the very beginning, because I know some people were having trouble. If you did miss something, you'll be able to stream this live feed again and kind of catch up on what you missed. Other than that, I pretty much laid out the framework for you. As I said, if you go and look below, there's an orange tab. It says get instant access now for $39 a month for Financial Alchemy Pro, which is the online training, which will explain a lot more in detail what I just showed you here, along with some other techniques and tricks. Until that point, everybody, you can follow me on Facebook, Robert Ritchie. You can send me a message. You can comment below here. You can get access. If you want one-on-one mentorship, that's something that you have to inbox me and we have to talk about. But other than that, I do appreciate everybody for hopping on.